If you're paying an employee $35 an hour and you're bidding jobs based on that $35 number, well, I hate to break it to you, but you're losing money every single time those guys clock in. So this is a huge reason I see that HVAC, plumbing, and electrical contractors misbid a job or don't end up hitting the margins that they want. Right? If they bid a job and they're expecting to hit a 20% margin, well, after all the vendor bills come in, they pay payroll and they double check, they might be at a 5% margin. Or worse, they took a loss on that job. Well, labor. Specifically, the labor burden and the true cost of your labor is what we're going to dive into today. So, what even is labor burden? Well, it's the gap between what you pay your employees, so they're just regular hourly wage, and what it actually costs your company to have them employed. So, let's use an example. I have Joe the journeyman here, and we're going to pay him $35 an hour. But between payroll taxes, workers' comp, health insurance, PTO, and non billable time, Joe is actually going to cost the company $60 an hour. So that $25 an hour difference, that right there is the labor burden. And if you're not accounting for it, it's going to hurt you on every single job and your margins won't be what they need to be. So I like to break labor burden down into two distinct parts. So part one is the part that most people are already thinking about. You probably already have this when you're considering bidding jobs. And that's the part that already hits your P&L. It's really easy to see. It's your federal taxes, your federal unemployment, state taxes, state unemployment, workers' comp insurance, health insurance, any of the other benefits, tools, uniforms, phone, etc. That's really easy to see. It's got an easy to find number to it. Well, part two is actually where those get amplified a bit more. So it's the efficiency killer. It's all that non-billable time that your techs have. It could be that hour meeting that you have once a week. It could be the hour lunch that you're paying them for, maybe. All the holiday time, the PTO, training days that are required potentially. Um, Basically, all of that non-billable time means when we do have billable time, we have to make sure that that is at a higher rate to account for all of the non-billable. So we need to know what their utilization rate is, and we need to factor that into the labor burden that we calculate. Well, holy smokes, is that a ton of numbers and math to pull together and try to figure out what the magical labor burden that I should be charging is. Yes, but it can be easier. We'll just dive right into my spreadsheet now. I'll show you exactly how to calculate it, and then you can just take the spreadsheet and use it on your own business. Alrighty, here we are. So we're in the spreadsheet. Again, this is the spreadsheet you can download in the link below. Go to my website. I don't care how you get it, but you might want to get it and open it and follow along as we go through this, at least with one of your employees. So again, we'll stick with Joe the journeyman here. He's our field tech. We're going to pay him $35 an hour. He's going to work a standard 40-hour week. And then now our business here, these are our defaults company-wide. We're looking for 20% net profit. We have our total taxes of 3.5%. So this is statewide. It's going to be like your unemployment, any additional taxes, things like that. A rough estimate of workers' comp. Again, check your own policy. You'll know exactly what this number should be. And then we have all the unpaid time, right? So PTO, paid holidays, training days. I am estimating roughly an hour a day in just non-billable time from stocking the truck, cleaning the truck, taking it through a car wash, whatever else needs done that is not necessarily on the job or driving to a job time. Health insurance, we'll keep it cheap, $500 a month. Retirement match, we're doing that, 3%. And then just any other miscellaneous benefits, whatever the dollar amount happens to be. So our company-wide benefit package, boom, right here for Joe the journeyman. So now that we have Joe in here, we have all of our company information set up. I'm going to pull back the hood a little bit and show you the calculations to show why the numbers are what they are. So we know that the base salary is $72,800 just based off the 35, 40, 52 weeks in a year. No issues there. And then so the burden wise, we add in the federal taxes, we add in the federal unemployment, that state percentage, the workers percentage, all the health insurance, the retirement, and the other benefits that you may have tacked on there. So Joe's total cost to the business is actually $95,739.20. So we went from the 72,800 all the way to 95,739. So if you stopped here, right, this is back to that part one. If you only looked at what was hitting you, then his cost is roughly $46 an hour. It's like $46.03 an hour with this 95,000. But here's the critical step. We can't forget about all the time that Joe isn't actually in the office and we're paying for him, or that he's in there sitting, not doing anything. Well, that's where these other columns come into play. So holidays, right? 6 days of holidays, 10 PTO days, 3 training days, 5 non-billable hours a week. All of those combined reduces his billable time from 2,080 to 1,687 hours a year that he is actually able to be working. And so that's roughly an 80% utilization, which is great. That's not necessarily unheard of. But that moves his $46 an hour cost all the way up to $56 an hour, $56.75, if we account for that lost time. So that's a huge difference, right? We're talking $10 extra an hour we need to charge to cover the difference in time spent between 2,080 and 1,687. So that is a much more accurate burden rate to look at. And now that 56.75 really adds up over time. So let's pop over to the dashboard. So this is normally what you would see. So Joe, right? Let's say he's at $35 an hour. Let's say we already thought about burden, just hadn't put a number to it. We were billing him out at $50 an hour, thinking we're making, $15 an hour profit, or at least enough to cover overhead. Well, if he actually costs $56.75 an hour, that means for every hour he's on a job, we're losing $6.75 an hour. So 40 hours a week, $6.75, that's $270 we lost that week just because Joe was clocked in doing the work he should be doing. And let's say you wanted to do that for 52 weeks out of the year. Well, that's $14,040 that we didn't account for, we lost, or that just kind of went away cash flow wise in the business because we didn't understand our numbers. We didn't understand what we needed to charge to be profitable. All right, so now we're in a really good spot. We know what the true cost of our employee is, and we know what number we need to put into Service Titan, House Call Pro, or Jobber to understand our gross profit margin. So that's a great spot to be. But wait, there's a little bit more I want to add to this. All right, so now we're going to jump over to that tab that we skipped over. You probably saw earlier, overhead costs. So what this tab's designed for is you put in all of your overhead costs here, right? Office staff. The office staff should not be on the field tech roster. You might have to split owner's pay a little bit between overhead and field tech, depending on how much time is in there. Doesn't matter too terribly much. Just depends on whether you want to see their burden hourly rate on the other tab. But anyway, get all of your overhead in here. It'll calculate your total overhead, just the summation of this. And then it'll calculate what your overhead cost per billable hour is. And now, so again, we're factoring in what that billable time is. And you'll notice that this billable time is kind of high. I secretly kind of added a few more employees so it didn't look ridiculous. So with this example, we're looking at $30 an hour in addition to cover overhead. So if we pop back over to our dashboard tab and we delete this, right, we can see the total billable hours. But these are the numbers that I really are interesting. They shouldn't belong in any software, but they're interesting to see. So our break-even rate, this one can be really, really useful when you're trying to figure out the minimum you absolutely need to charge. Well, if you know how long the job takes and you know who's working on it, this is your minimum break-even billing rate. So it includes this burden rate, so the cost of the employee, the direct labor, plus that overhead from the overhead costs. So if Joe was going to go work on something and you just needed to break even, it's the slow season, you need to be really competitive on this job, right? Really, we should be trying to get it at $87 an hour. So that's really useful. And then back to that profit margin we put in the initial, this is the only place that's included. So you're taking this total rate and you're dividing it by that 0.2% to get, hey, I have to bill out at $109 an hour to hit my 20% profit margin. And that's kind of the crazy part about this, right? We took that $35 an hour employee, Found out we need to charge $57 an hour just to break even on him. Found out we need to charge $87 if we want to pay the office people or make sure we have a building for rent or vehicles to drive around. And if we want to put money in our pocket, we need to charge $110 an hour for him. So that $35 an hour employee, really, we should be billing him out at 110. So that's crazy and can be one of the reasons why contractors remain busy but broke. So we need to know our numbers. And to do that, download the calculator, use it, fill it out. And remember, the data inside of it is only as good as the inputs you put into it. So don't guess, pull up your P&L, put in the right numbers, make sure the numbers in here are accurate so you can actually see what it's costing you. Pull a time tracking report out of your field service tool. Understand what your billable hours actually look like. So it can be a great tool, but only if you put accurate information into it. And so now I'd like to talk about some of the mistakes I see when people are either trying to calculate this or don't even think they should. Mistake number one is they just use a flat burden rate. They just put, I know I need to pay a little bit of taxes, little this. I don't even think about the non-billable hours. So they just use like a flat percentage rate for everybody on the staff, like 20, 25%, something that feels right. And as we've shown, that's not anywhere close to what it potentially could be. This is just an example. I made up a whole bunch of numbers, so keep that in mind. But even just thinking about it, right? An office staff is not going to have the same burden as your field tech, right? Your workers' comp is not the same as your office staff. Your pay rate's not the same. All of that factors into what you need to be charging and understanding that portion of the numbers. So mistake number two is forgetting to update this, right? You do this once, you do it really good one time, and then you never come back. So 3-5 years down the road, you're still charging the same rate, or you updated it with cost of living or something like that. That can be close, but just fill the sheet out once a year at a minimum, right? Your workers' comp's probably changing, especially if you had a bad year or you had an emergency or you had to actually use it. Health insurance premiums are skyrocketing at the moment, as everybody knows. So recalculate it once a year just to make sure that your billing's on par, and stay on top of it. And then mistake number three. So again, we've highlighted it a couple times in this video, but it's just worth reiterating. So the burden costs are not just the physical or the cash moving out of your account. It's all of that unbillable time. You have to keep tracking that unbillable time and knowing roughly what that is, because that is so key to making what your actual profitable rate needs to be. Look, I know this can be complicated. I know it's a lot of numbers, it's a lot of math, but just download the calculator, plug in your information, and you'll be in good shape. You'll be able to see your numbers, and you'll be able to make much better decisions with regards to your pricing moving forward. So if you need any help cleaning up your books, you don't know what quite to input into the calculator, just book a call with us. That's what we do, right? We're accounting for trades. We help you guys understand your numbers better. That's our whole goal. So I'm Austin with Accounting for Trades. Thanks for watching. Appreciate your time.